Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Coming up on Market to Market, President Biden addresses Congress and tax policy, replanting crops and canopy with the future in mind.
That's what it's all about.
What was out there.
And market analysis with Dan Huber next.
Parts of the world, we certainly know that there.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, April 30 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Annual lookbacks in 2021 to economic data of 2020 are both misleading and unbalanced. A couple of examples here. March's orders for big-ticket manufactured goods went up 0.5% or 0.5%. The rebound may be higher once supply chain disruptions are smoothed. Consumer spending rose 4.2% last month, according to the Commerce Department. Jane and John Shopper account for 2/3 of the economic activity. The Fed says they'll keep interest rates where they are for now. Tax rates, though, are a different story. This week, President Biden delivered his first speech to a joint session of Congress. He's calling for an increase in taxes on the richest 1% and has other changes in mind. Peter Tubbs reports.
But it's time for corporate America and the wealthiest 1% of Americans to just begin to pay their fair share. Just their fair share.
In a joint address to Congress Wednesday, President Biden proposed sweeping changes to the federal tax code, including provisions that would affect the heirs of farmers and ranchers. The White House proposed a reversal of the 2017 tax bill and reforms that seek higher tax payments from America's wealthiest households. An increase in the highest tax rate in earned income would be joined with a change in the way estates are valued. The president's plan would eliminate the practice of stepping up the basis for gains in assets in excess of $1 million, but would also defer estate taxes on farm, ranch, or small business assets as long as the farm or business remains family-owned. The step-up valuation has long been common in the inheritance process and has allowed generations of farm families to avoid paying capital gains taxes on inherited land. The lowering of step-up allowances is an attempt by Democrats and the White House to target inherited wealth in the form of stocks, bonds, and other non-business-related assets. A carve-out provision for business and agricultural assets is an attempt to encourage investment in family-owned businesses and farms without fears that financial growth will be taxed during the inheritance process. Roughly 1/3 of American farms operate over 90% of farmland, and the size of some farms could trigger tax issues under the new thresholds. The USDA released a rough outline of the proposed tax reform shortly before the president's speech, where it estimates that less than 2% of farms would owe taxes on inheritance, but only on non-farm assets. The American Farm Bureau argues that maintaining step-up calculations in inheritance land transfers keeps the marketplace for land liquid. Reducing the step-up allowance could discourage land sales in some situations, which might inflate land prices due to decreased supply. The president's speech was written in broad strokes, and details of the proposed tax changes have yet to be presented.
My fellow Americans, trickle down. Trickle-down economics has never worked, and it's time to grow the economy from the bottom and the middle out.
From Market to Market, I'm Peter Tubbs.
This week's Drought Monitor reveals 68% of the U.S. is in some form of drought, the highest mark since January of 2013. The weather is always a topic of conversation in agriculture, whether it be seeds that can handle dry soil or other adverse conditions. Wind is so constant in Iowa, the state has about 6,000 turbines to harvest the breeze. But the storm that produced hurricane-like outputs across the upper Midwest last August is still creating an impact. Josh Bittner looks at the efforts in our cover story.
On its 14-hour, 770-mile-long path of destruction from South Dakota to Ohio, last summer's derecho storm thrashed Iowa's immature row crops with triple-digit wind speeds, destroying an estimated 1.6 million acres of corn and soybeans, along with 100 million bushels of stored grain. Farmers abandoned nearly half of Iowa's flattened corn crop. Some dredged for yields, but 2020 proved an excellent field test for short-stature plants under development over the past decade.
The derecho was just icing on the cake. The fact that it did well with the derecho. The fact is, it is the corn of the future.
Myron Stein is president of Stein Seed Company in central Iowa's Dallas County.
9714, which was the hybrid in much of Iowa here, stands extremely well, has high yield potential, is our most popular hybrid, and it excelled with the derecho. We have side-by-side documentation of some of our own other taller hybrids and our competitors' material where it stood perfectly and the competitors, it was flat.
Stein has growing competition on condensed varieties as well. International agrogiant Bayer unveiled their own short-stature commercial strain in Mexico last fall and reportedly will be available in the U.S. by 2023. Both companies say tweaks to current production models will allow denser planting of short-stalk corn and less susceptibility to erosion.
You can still see there's some really large trees here that have their tops taken out or they're knocked over.
Farmland wasn't the only rural icon decimated by straight-line winds. According to the Iowa Department of Natural Resources, around a quarter of the state's nearly 3 million forest acres also were compromised.
As far as the nut production, it came through on August 10th, and that's before black walnuts or hickory nuts were mature enough to be harvested, so it just wiped out the crop for that year.
Del Lawrence is a retired landowner in eastern Iowa's Lynn County who normally sells specialty fruit and nuts at area farmers markets.
And spent time recovering and restaking everything.
Post-derecho, as a member of the Iowa Nut Growers Association, Lawrence volunteered an unused section of his land to take part in a joint USDA academia effort across several states to accelerate hazelnuts as a viable perennial cash crop. While fruit and nuts may account for less than 1% of Iowa's total farm acres, advocates see a future where marginal farmland could be diversified with nut trees to serve burgeoning niche markets.
From the day of the derecho for the next 2 weeks, our fire department and police department responded to almost 10,000 calls for service. Normally in a 2-week period, we might have 900, 1,100.
Nearby Cedar Rapids is the seat of Lynn County and the state's second largest urban area. As the epicenter of the storm, Mayor Brad Hart says local businesses reported $165 million in losses. Most of the city was without power for weeks as an estimated 100,000 trees gave way, 65% of the urban canopy. Streets were blocked and some 6,000 homes were damaged or destroyed, leaving 4 dead. With peak wind gusts of 140 miles per hour, the city was dealt conditions familiar to Gulf states, save one lumbering distinction.
The disaster recovery teams that came here said they'd never seen anything like this because they go to communities mainly after hurricanes. And those communities, at least once every 10 years, have a tropical storm, and the weak trees go down then. Not here. We've never had a land hurricane in Cedar Rapids, so all kinds of species, but primarily the oak trees that have been there for 80, 150 years, couldn't sustain 40 minutes of 100+ mile-an-hour winds.
City officials expect a recovery price tag up to $80 million from what has been labeled the worst thunderstorm cluster in U.S. history. But the mayor touts robust financials and resilient citizens who've encountered other extremes like flooding in recent decades.
We will recover from yet another disaster because that's just who we are.
Cedar Rapids has committed up to $1 million annually for 5 to 10 years on a massive urban design replanting effort, selecting a variety of native and steadfast trees in the face of extreme weather, disease, and invasive species.
We're not here to plant trees. We are here to grow trees.
Coordinated efforts kicked off across the metropolitan area on Earth Day.
I had planned to retire, and the city of Cedar Rapids asked Trees Forever and me personally to stay on to help lead a new plan.
Shannon Ramsey is the founder of Trees Forever, based just up the road in Marion, Iowa. The renowned grassroots nonprofit is dedicated to replanting, habitat protection, and positive environmental impacts in both urban and rural areas.
Trees in the right spots, along with grasses and shrubs, will filter up to 75% of sediment and chemicals as they run across a farm field and enter the buffer of trees, shrubs, and grasses, and really do a great job of cleaning the water.
For decades, Stein Seed founder Myron's father, Harry Stein, has been deeply involved with Trees Forever, which helped fund Del Lawrence's Hazelnut project as well. With a family history in the lumber industry, Ramsey celebrates Iowa's high-quality hardwoods and applies locally inspiration from communities who bounced back from other natural disasters.
After Katrina hit, people were out in the neighborhood saying, you know, we're going to come back here and live, and we're going to plant hope. That really inspired me to think about it after the derecho. We are planting hope, hope for the future. We're planting these trees for future generations. That's what it's all about.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Grains traded in 8-year highs as the same components of weather, demand, and China stayed fused. For the week, July wheat added 23 cents, while the nearby corn contract leaped 41 cents higher, or 6%. It is not clear if the bulls have pulled an Irish goodbye in the soybean complex, but the technicals spent part of the week possibly signaling their quiet departure. July soybeans improved 19 cents. July meal added 30 cents. July cotton shrank by 72 cents per hundredweight. Over in the dairy parlor, May Class 3 milk futures rose 31 cents. A mixed week in the livestock sector. June cattle added 85 cents. August feeders shed $3.15, and the June lean hog contract gained by $4. In the currency markets, U.S. dollar index increased 40 ticks. June crude oil expanded $1.34 per barrel. COMEX gold decreased $8 per ounce, and the Goldman Sachs commodity index improved almost 13 points to finish at 505.50. Now here to provide insight is regular market analyst, Mr. Dan Huber. Hello, sir.
Hello, how are you?
I'm all right.
Very good.
That's pretty much all I got. Hello.
It was kind of a boring week, so there's not much left to talk about.
There's nothing to talk about anymore, is there? I mean, have you ever, Dan, I mean, you've done this a couple of years, seen a period of time like we've had since August? We just referenced a piece in August. Have you seen a 6 to 10 months like this?
Yeah, not in this kind of veracity or this kind of volatility. I mean, generally you would associate this kind of move with a summer rally. And even then, summer rallies, 4 or 6 weeks, they're done and over with, and that's just it. But, truly, I mean, this is demand-based. I mean, granted, it started with some supply issues, but, with China stepping into the market and, some of the production problems we ultimately found out we had last year, this has just grown and grown. Now, interestingly enough, it's been very orderly. And again, I mean, one of the main purposes of when you get into a market like this is the market has to discourage demand, help promote production, which, we've done a pretty good job there as far as the acreage. We're looking at additional acreage for corn and soybeans this year, but not up until recently have you kind of seen that panicky type of buying that would be associated with, well, we've really got to kind of squeeze the noose around the demand out there. And, I wouldn't necessarily say we've got the job done yet, but at least we started the process.
We could talk about buying acres in corn, but let's start with wheat, where there was a big supply a year ago at this time. All of a sudden, some demand has come to feed livestock with wheat.
Correct.
Is that the big fuel to this rise.
I think absolutely. And granted, I mean, some of it's just, there's always a certain amount of people look at it, well, corn's a little high priced and beans, maybe have kind of capped off what they can do, so let's just go over and buy wheat. But certainly on a worldwide basis, I mean, beginning a few weeks ago here, the Chinese government put out official recommendations to the livestock industry and how you can rebalance rations with heavy emphasis on feeding wheat. And you're seeing that in Vietnam, you're seeing that in South Korea, some of the major, I think 23, if you take South Korea, Vietnam and China, there's 24% of all the corn export business in the world. And if they're starting to look at alternatives to using corn or soybean meal, it's going to show up. And I think that's what's shown up in the wheat here in the last week or so.
It's the question for all the grains, though, right now. Are you making any sales? Specifically, I mean, let's start with the old crop. We're almost to the point of having some winter wheat getting close to coming onto the market. Are you making sales in either nearby or deferred contracts?
Oh, and again, and all the way around. Of course, when it comes to old crop corn and soybeans, there's really not much inventory left out there. But, nobody has the crystal ball that's going to allow you to pick the top on this. We just don't know how insane it could get. Or maybe we've already priced in a lot of forward thinking here as far as weather and demand and that type of thing. So, to sit back and think I can hold out until I'm going to get that final penny is usually a kind of a fool's errand. So yes, I mean, we continue to recommend that on a scale-up basis, use your business acumen and start locking in the profitable levels that are out here.
You mentioned the old crop corn. There's not a lot left. I got an email from somebody just before we taped today who said, I still have 90% of my grain to market. Now, it's not a lot. Last week we talked about maybe only 5% of the old crop still was in a farmer's hands,
right.
Do you subscribe to that theory?
Well, I think so. Of course, the difficult way to when you conceive that, though, is, we're still going to look at 1.4, 1.5, somewhere is inventory of corn, maybe it's 1.3, I guess, if the demand doesn't really back off. But, that is not a critically tight supply of corn. It's probably in the wrong locations, and you're going to have to see basis move it from areas of shortages or areas of excess into areas of shortage. But, it's not that we have a true supply problem in the corn, unlike the beans, where, yes, we know it's going to be nip and tuck to make it to new crop beans this year. So, but here again, that said, I don't know if it's some of that's probably pre-priced, waiting to deliver into later months, although with the inversion in the spreads and the cash market, there's probably not a lot of incentive to carry for any amount of time, but could have been booked early on. So I think the majority of it's already moved into, or is passing ownership into those who are going to use it. So
that's the old crop situation. Got a new crop question.
Okay.
Came from Phil in Dresden, Ontario, via Twitter. Thank you, Phil, and everybody else who submits their questions each and every week. Dan, with December corn closing at approximately 546, November beans at 13.18 on Thursday, are we beginning to see demand destruction at these levels, or are new crop prices still about new crop weather in July and August? And how will we cope with the volatility this summer?
Well, of course, I would say yes on both. I think we are starting to see demand destruction. That's a great example, I think, and granted, this pertains more to the old crop at this point, but look at the hog numbers when they came out. I mean, shocked everyone that we were not seeing expansion in that industry. And I think, they've had a rough several years, so they didn't really have the economic incentive. And yes, we've seen a phenomenal hog rally along with the rest of the ag sector here at this point in time. But, all you're doing is keeping pace. So I don't think if anything, yes, I think we're starting to back down the demand. And little incentive, why would you want to try to take the risk of expanding 6 months down the road when, those markets are really, still well within where we've been in the last 3 to 4 range when it comes to fall months. The one place we haven't seen it, now, and granted, new crop, old crop are two different stories here this year, but one thing we haven't seen it yet is in the ethanol industry. I mean, good margins yet, so they have all the incentive in the world to continue to grind as much corn into ethanol, and of course the DDG market is going to remain substantial for the feed side of it. So. Not happening yet, but, again, even in that industry, all it would really take would be for Saudi Arabia to maybe kind of turn up the nozzle just a little bit and start pushing a little more oil onto the world markets, and you've put a cap on that.
Crude oil finished at 63.51 this week. So anything above $50 is usually seen as positive for the ethanol industry. All right, new crop corn, though. The volatility that happens interday right now is very hard to You'll be down 11 and finish up 30. That's about to get worse come Monday, and we'll kind of talk about the volatility that's even going to expand in Market Plus. But how does someone who's trying to plant a crop right now market that crop, specifically corn, while they're out putting it in the ground?
Well, number one, I mean, again, this really comes back to why you need to have a plan in mind, sit down and certainly put on paper and offers put into place, because one, you can't your job as a producer is not to be watching the market every minute it is trading. That said, if you've done your homework, you know what it's going to cost you within reason, what production is going to be this year. I mean, you've got crop insurance in place to cover some yield losses, and if you're at the point where the return on investment is exactly what you're shooting for, or within the range you're shooting for, I mean, there's no sense to not continue to sell into it, ideally on a scale-up basis, and just in the fact that when it turns, markets, just like bottoms never occur in market because the news got bullish. It's always the most bearish news when you're at the bottom and ready to turn up. Same thing on the top. It's going to peak when everything looks the most bullish, and it'll come as a surprise, and at some point we're just going to run out of the capital coming into the market. It's a little bit curious right now. For the last 2 weeks now, we've had large specs exiting the corn market, even though we've continued to push higher, which, I would tend to say that might, not that they still have a massive long position in the corn market, but I think it would be indicative of saying we've probably committed as many dollars as we need to this market at this point in time. And if anything, we're starting to rebalance a little bit.
Pull the cord. Is Dan Huber bearish about the bean market?
Hugh bearish, outside of weather is the wild card, of course, at this point. Old crop beans, though, it's just difficult to see much bright in there. I mean, not that we're going to come out apart, because we have got to continue to ration demand the best we can. But even in South America, you've seen basis levels start to slip in Brazil at this point in time. So I think China has maybe backed away, or maybe have secured the needs they have to have for beans at this point in time, which opens up that whole other discussion about, is there really a major reoccurrence of African swine fever in that country? And if there is, again, the news is sparse at best out of there. Some of the privates that we've had contact with say it's as bad as it was 2 years ago. But you certainly don't get that from the popular press. And even the U.S. Ag Attaché said, well, if they get beyond these problems, yes, they could be back up to where they were a few years ago. But nobody has a great answer on exactly what's happening there.
Well, then let's stick with hogs and go into the U.S. hog market.
Sure,
the hog producer who's maybe taken a shipment this week, is he in a good position?
Oh, absolutely. I think right now you can future them off. Granted, your feed costs are, it's nice if you want to lock those in as well, if you really want to keep the margins there. But I think for the time being, certainly. But here again, too, I mean, there's been no expansion in the domestic hog industry, and we're still seeing, even though the export to China were down this last week, they were still importing pork from the U.S., and the total numbers had a nice rebound. So it's, we're still putting a lot of pork out of this country.
Got to get this on the record. Thursday, it was the first time in 56 days that the lean hog index is down. So you take that for whatever you want. Sure. But in the livestock, in cattle, let's start with live cattle.
Sure.
Cash and futures have been different. Cash has been dramatically different. But a lot of people are asking me about packer margins. Is that going to be the big story in keeping a lid on the cattle, or is it a drought story? I'm selling so many cattle right now because I've got animals on dry conditions.
Well, you're probably bringing some animals off that are a little premature and have to move them out because they're not looking at adequate amount of hay out there. But there is no simple answer to what's going on in the packer industry. We do not have enough packers in this nation. They're controlled by too few people. But how do you, granted, they're making phenomenal margins here at this point in time, but, beyond that, how does a community welcome a new packing plant? And I think that's as big an issue as anything else is, nobody really wants those sitting in their backyard.
The NIMBY, not in my backyard.
Exactly. So, I mean, you can push and say all you want as far as, well, the economics are there, but, if it came to actually to push to shove, are we able to construct that someplace? That's a whole nother challenge that may be insurmountable.
If you're ready to take order on a shipment of live or feeders this week, you in a good position?
That's a little more questionable. I think and granted, we're still looking at a pretty decent fat market out there, but with the unknown being in the feed sector at this point in time, that's usually a little bit of pressure into the feeder market. But not that we're going to see a collapse in the meat markets this summer. Granted, we're just starting into what should be our grilling season or our peak demand. But that said, we've run up pretty well into these in anticipation of that, in anticipation of the COVID rebound or the post-COVID rebound. So, we might have factored a lot of those things into these prices already, unless it comes in the export side.
All right. Dan Huber, thank you, sir.
My pleasure. Thank you.
Time goes fast.
It does.
All right. That's Dan Huber, and that'll do it for this installment of Market to Market. We will keep this conversation going in Market Plus, so join us there. Find that on our website of markettomarket.org. And you know what? The beauty of planting season is in full display via Instagram. We've shared many of your posts in our stories section of our own feed of Market to Market show. Follow today to see those pics. Next week, we look at the push and pull of agriculture with China. Thanks for watching, and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.